Hello and welcome to another episode of the VMC Inc. Financial News Network. I'm Victor Campos. Today I want to look at an amazing book that I highly recommend for all beginning investors. This is The Elements of Investing, Easy Lessons for Every Investor by Burton, Malkiel, and Charles Ellis. This is a very compact book, very easy to read actually. It's less than 200 pages, not very wordy, and it's smaller than most books, actually. It's almost a pocket book. I've got the updated edition, and it just has a lot of great, valuable information for first-time investors, just about everyone. And so I'd like to mention a couple of excerpts from one of the chapters, the Keep It Simple chapter. This is the review of basic rules. Now, obviously, buy your own copy of it. It's not expensive at all, and I highly recommend it. Rule number 1, save early and regularly. You want to invest whatever you can, whenever you can, as long as you can. Rule 2, use the help of your employer and Uncle Sam to supercharge your savings. So basically, the authors talk about taking advantage of your company's 401k or 403b, especially if they match your contributions. If you're putting in $100 a month from your paycheck to your 401k and your employer's doing it too, or some percentage of it, you could be doubling your money and getting closer to that sweet retirement. Rule 3, set aside a cash reserve. So this is basically a safety net, some cash, that is, just in case something goes wrong. The authors recommend about 6 months of living expenses, so whatever you usually need to survive, multiply it by 6. So in a bank, a plain old bank is fine. Money market account is even better, because you never know what's going to happen, and if you don't have any cash to fall back on, you could be in trouble. Rule 4, make sure you are covered by insurance. Now, not everyone likes to talk about this or even think about it, but you are going to croak one day, and you may do it before it is your time. You don't want to leave your loved ones without any help, so the authors recommend get some life insurance. Here, buy simple, low-cost term life insurance, not complex whole life insurance, which combines a high-cost investment program with the life insurance you need. So just keep it simple. Rule 5, diversification reduces anxiety. So don't put all your eggs in one basket, especially when it comes to your money. Don't pick a few stocks and then toss and turn at night when the stock goes down. You want a large basket of stocks so that if one sector goes down, it doesn't affect as much your other sectors. Rule 6, avoid all credit card debt, period. This one is a killer. Credit cards, honestly, I personally believe are one of the worst inventions of mankind. Yes, that sounds cataclysmic, but think about it. This is imaginary money that you are free to spend and overspend and overdraft as much as you want. And then when you need to pay it back, because credit cards need to be paid back, you're going to be charged 15, 18, 20, 25% of the debt, and you're going to have a hard time crawling out of that hole. So avoid getting into it. Rule 7. Ignore the short-term sound and fury of Mr. Market. Keep your eye on your retirement. Don't worry about the ups and downs of the day-to-day market, week to week, month to month, even year to year to some degree, because you're not going to retire in 1 year, 5 years, 10 years, probably 20 years, 30 years, 40 years. So in that long time horizon, these bumps in the road are going to be smoothed out. So don't pay too much attention about what stocks did today, but think about how they will be in the future, because we have 100 years of data to show you're going to make money on the stock market. Just look to the future. Rule 8. use low-cost index funds. So this goes back to the diversification rule. Basically, you want to not put all your eggs in one basket. But what's different about this is that you're going to invest in something like a mutual fund or an ETF where basically computer algorithms will help you invest your money in a smart way, which reduces fees, because there's always going to be someone out there that wants to sell you something financially. The wisdom of technology and indexing is going to pay off in the longer term because it's less money that you need to spend to make. So you have to spend money to make money. You can do it smartly with index funds. Rule 9. Focus on major investment categories. Avoid exotics like venture capital, private equity, and hedge funds. So basically, investing could be difficult or it could be not so difficult. Once you start trying to invest in venture capital, strategies, hedge funds, and all of that, this gets much more complex and the probability of you making mistakes and losing money goes higher. So just keep it simple. So The Elements of Investing by Malkiel and Ellis, highly recommended book. You should pick it up. It's a very breezy read and full of so much information. I wish they would give this book away to high school students because everyone could benefit from the information here. I know I have personally. I'm very happy with this book. I highly recommend it. So this has been Victor Campos for the VMC Inc. Financial News Network. See you next time.